Hey there, welcome back to my channel, it's me the Mind Injector. In this video, we have some exciting news to talk about in the world of tech and social media. It's all about Snap, the parent company of Snapchat and their recent roller coaster ride in the stock market. So, if you're into investing or just curious about what's happening with one of the biggest social media platforms, you've come to the right place. Before we dive into this video guys, I've got some exciting news for you. I want to introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each, plus free premium courses to help you sharpen your investing skills. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up for a Moomoo brokerage account using the link in the description and start earning those free stocks. Now, let's jump into the main content of this video. Now, last week, Snap reported its second quarter earnings. And let me tell you, it was quite a roller coaster for their stock. The earnings report was actually better than expected, with revenues and earnings per share both beating market expectations. But, despite these positive numbers, Snap's shares took a huge hit, plummeting around 14% after the earnings call. So, what went wrong? Well, it seems like investors got spooked by Snap's revenue guidance for the third quarter. The company projected revenues of $1.07 billion to $1.13 billion, which implies a year-over-year decline of 5, and that's what sent the stock crashing down. But here's the thing. We think investors might be overreacting a bit. Sure, the revenue guidance for the next quarter wasn't as stellar as we'd hoped, but let's not forget the positive aspects of Snap's earnings report. First off, their daily active user count is still going strong, with 397 million users in the second quarter, a 14% year-over-year growth. That's a significant number of new users added to the platform, and it shows that Snap is still growing and holding its own against competitors like TikTok. Plus, let's not ignore the potential game changer for Snap, their paid subscription service Snapchat Plus. This service offers users early access to new features and customization options for just $3.99 a month. And guess what? It's gaining traction. In June alone, Snapchat Plus hit a milestone of 4 million subscribers since its launch last year. And if just 2.5% of Snap's users take up this subscription offer in the long term, we could be looking at close to $500 million in additional revenues. Now, there are some risks to consider when it comes to investing in Snap. One of the major concerns is their reliance on advertising revenue, which has been somewhat volatile in recent times. Economic headwinds and changes in Apple's advertiser policies have impacted Snap's ad revenues, making investors a bit nervous. But Snap is taking steps to address this issue, and that's where Snapchat Plus comes in. By diversifying their revenue streams with a subscription model, Snap is moving away from over-dependence on advertisers. It's a smart move that could eventually lead them towards profitability. Speaking of profitability, that's one of the challenges Snap is still facing. They are not a profitable company yet, and it might take some time for them to get there. But as they continue to grow their user base and experiment with different revenue streams, we might just see them reach that milestone in the future. So, what does all of this mean for investors? Well, Snap's shares have definitely taken a hit, and they are not exactly cheap at the moment. But if you believe that the market has overreacted to their third quarter revenue guidance, then Snap might be a speculative buy with some recovery potential. The underlying growth in their daily active user count and the success of Snapchat Plus subscriptions could be the catalyst for a rebound. Now, I should mention that Snap is still a high-risk investment, and it's not without its challenges. But if you're willing to take a bit of a gamble, the potential rewards might be worth it. This is it for this video guys, thanks for watching and please make sure to subscribe, like and leave a comment down below.